I asked Grok just now about real-world asset tokenization. I believe the tokenization of real-world assets representing things like treasuries, real estate, credit. Yeah, there are some real-world assets that can be tokenized well. We actually already have this, right? We've got the US dollar. That's more or less a real-world asset that's getting tokenized through stablecoins. But for real estate, it's a bit more complicated. Private credit we do have through Ondo, but that's also just a bubble waiting to pop, because whenever private credit gets tokenized, the quality of that credit is really the main culprit. And that's actually the main basis how banks operate, right? The bank's major risk is always credit defaulting. They make money on expanding credit. They create new money out of thin air. But if that new money suddenly doesn't get the cash flows, doesn't get the operating cash flows, then the debt defaults and then the bank goes kaput. And so that's a problem with tokenizing private credit, because then suddenly we now move that risk that the bank has to assess, we now move that risk to the buyer of the tokenized debt. And so then this incentivizes whoever issues the private debt, the tokenized debt, to just issue as much as possible, make fees in the process, and then the bag holder is the one that's buying the private debt once the private debt defaults. If the bag holder of defaulting debt is the bank, then the bank will be careful of issuing the debt. But if the bag holder of defaulting debt is somebody else that bought tokenized debt or that bought mortgage-backed securities, if the bag holder, the risk taker of the debt, is somebody else that's not really helping to issue the debt, then the risk really starts. That's really where we want to be careful. We do not want to necessarily buy private debt where the risk assessment has been done by somebody that gets incentivized to issue that debt. We want to just underwrite debt where we already made our own risk assessment. So that's why tokenized debt might become a thing, because some people get a lot of money doing it, but it might be very, very problematic to buy into that debt. I think it's the same as buying mortgage-backed securities. It's just a ticking time bomb. But it might be something that could grow, because the incentives are misaligned in a way that the issuer can make a lot of money and the buyer might not be aware of what they're getting into. But yeah, there is some tokenization of real-world assets. We've got the US dollar. We might get more of private debt. But especially when it comes to regulation, right, when it comes to securities, etc., tokenizing those just circumvents insider trading. And this might be less of a problem, say, with ETFs, right? So tokenizing, say, the Nasdaq 100 is okay, probably, because here insider knowledge doesn't help us much. Tokenizing very large tech stocks might also be somewhat okay, because there is less of an insider edge, because a lot of the relevant information already leaks beforehand. But especially for the smaller stocks that aren't as efficiently priced, where insider knowledge gives us a lot of edge, when those get tokenized, that's pretty much the death of the market of those stocks, because then medium-sized stocks will have a very hard time on average to outperform. So that's why I don't believe in real-world asset tokenization for smaller stocks, especially. For the major stocks, it might come.